because they were entering the market for the first time too, they just had nothing, right? So it was nice for us because it exposed all the gaps we had. So we would start and we were transacting, and it was a lot more volume than we were transacting with initially. But then they'd be like, "Oh, cool, guys, how do you send us the recon files?" And we're like, "Well, what's a recon file? Oh, what do you mean?" Okay, cool. And then you have to work that out. You got to build it quickly. And then we start transacting a bunch, and then there's a bunch of real-time fraud that's happening. And they're like, "Cool, guys, like, how do we turn on your fraud APIs?" Like, what fraud APIs? What do you mean? And then you're like, "Okay, cool. You need to work that out." And then they're like, "Okay, cool, guys. Like, now our users want to withdraw money. How do we do that?" And we're like, "What? We just do payouts. What do you mean you need to do payouts?" So you got to learn that. And it was like constantly, like every day, you're just getting like slashed in the face and trying to work it out.
South Africa is a very interesting payments market. It's one of the most advanced financial services market in Africa. There's around an 84% financial inclusion rate. And the interesting thing about that 84% is that it's grown from 54% in 2011. But the thing that's even more interesting, that it was in fact 54% all those years back, while the rest of the continent was around 20-30% at the time. So it's an advanced financial services market. Additionally, I think a report from Stitch, which is my guest today, shows that subscription payments are projected to be around $820 million this year. Total digital payments market in the country is around $20 billion. And this is growing fast. Moreover, in addition to an advanced financial services market, there's so much innovations around the payment side from both businesses and the government. Recently, just some time back, South Africa introduced PayShap, and it's growing exponentially, and it's slowly being called the UPI of South Africa. Today I have Kiaan Pillay, who's the CEO and co-founder of Stitch, a very interesting entrepreneur who's going to talk to us about his journey at Stitch and the broader South African payments landscape. So Kiaan, thank you and welcome to the show.
Thanks so much for having me.
Cheers, man. I've been really looking forward to this conversation. I really admire some of the work you're doing. So let's start by you giving us a quick background. Who is Kiaan, and what's just short intro to yourself?
Yeah, sure. As you mentioned, I work at Stitch. I'm a bit of a payments junkie. Previously was a developer, but now would be executed if I touched any of the Stitch code base by any engineer that works here. But have always loved tech. I've always liked tinkering, especially on things in the payment side of things. I've been at a few other African startups before this. Immediately before Stitch, I was at Smile Identity, which did Pan-African identity, which still does Pan-African identity verification APIs. And I was at Root before that, which is now insurance APIs in South Africa, but was a digital bank at the time I was there for developers. And I am South African born and bred. Excited to be chatting. These are the silly things that I geek out on.
Fantastic, and that's a very interesting background because it segues really well into the first discussion. Stitch initially started off as a kind of open banking API play. I think at the time it was viewed as the Plaid for Africa, and very 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 interesting starting. Now, you are an engineer. Your background was an engineer. Can you just tell us the insights that led you start off Stitch specifically as a open API play?
Yeah, sure. It wasn't. I think insight is very generous. I think myself and one of my co-founders were trying to build a person-to-person payments app. It was a stupid, very bad, horribly put together side project that we were working on. And we largely got everything working except payouts, right? So we used somebody else's payments API and we begged and borrowed banks to let us work with them, and everything we had was non-compliant. It was terrible. But we kind of got to the point where we could do everything. And this was like 9 to 12 months of weekends and evenings later. We put together this horrible app, but could do everything except payouts, right? So if you said, hey, I want to withdraw my money into my bank account, the way it would work is that we would get a Slack notification. Whoever would see the Slack notification first would just like manually log into a personal bank account and just like do a payout, right? And it was horrible and it was a mess and it didn't work. But actually, the user experience wasn't bad, right? Because if you like, with Bank A, we would log into Bank A and we'd send you the money, and you'd get it in real time. And so that was really nice. We were doing, 2 payments a day, 5 payments a day, 10 payments a day, and it started to break. I would say when we did like 50 payments a day, we had like 3,000 monthly active users or something, which was really nice for us because, we kind of were just doing this as a side project. So that was like a big achievement for us. But even that becomes like really tedious when you're literally logging into a bank account and paying somebody out, right? We were like, pull our cars over to the side of the road because you'd see a notification, or you'd be at gym and you drop the weights and you do this, or, all these horrible, stupid things. And so I think one night we were tinkering and we were like, this is just so dumb. Like, let's automate this, right? Like, what are we doing? We're filling in forms, right? And we're navigating a website. So I think insight was more that like, we could screen scrape and do this, right? It was like, you could literally like, screen scrape into a bank account. You could enter username, password. You could click login. You could navigate to a payments page. You could, check out. And it sounds like a little ridiculous now thinking about it, but when you get to that point where you have like, slash bank slash payout and you hit that endpoint and it like screen scrapes and it does whatever and it like it eventually executes the payment. It's super cool, right? It like you think about this, is like 5 years ago, right? And you're like, oh my word, this is like an API for a bank account, right? Which it's not, and it wasn't the case or anything like that. But as a concept, it's really, really cool. And I think what was like encouraging or interesting for us is that we were like, this is kind of like open banking, and this is what Plaid used to do, and this is what Tink and TrueLayer do, and Yardley, like way back in the past. And we're like, but they did it all with APIs, and they have all these like very fancy systems in these very Western markets. And actually, to some extent, a lot of these people just did this. Right, they just became really good at like screen scraping at scale.
Precisely.
In like all these like seemingly very modern markets, but for the longest time, Plaid was screen scraping and Tink was screen scraping, and these are like billion-dollar companies, and they're working at huge scale. So that was like the start for us. I to be honest, like I wish we were really clever, and I said we saw this huge gap in the market or this or that, but we were just like tinkering around on like a lot of stuff, and like we were like, technically we can do this as developers. I think these clever people in the world building billion-dollar companies are doing it somewhere else. This must be a thing, and that's what we ended up doing. So no real intelligence.
And actually, that's how most successful companies start off. Like, there's rarely a grand idea. It's always tinkering and then figure something out, and it works. And so that was the core product. And is that the thing? Because you guys came out of stealth back in February 2021. At least that's when the announcement came in. And that was a $4 million raise. And within a year, you're done a $21 million Series A. And, despite the fact that it was 2021, it was 40, that was still pretty impressive. And so, like, you've tinkered this thing. Where was your growth coming from? Like, who was just coming knocking at your doors and says, this is something we need? So how did that growth period happen?
The super candid answer is everything you sort of just talked about is actually a little bit pre-growth. We, I think, could really demonstrate that we had a big vision. We could like demonstratively show that we had a really exceptional team, right? That's something to this day that we like hold very dear to us. We think we have like one of the best teams globally, not just on the continent. I think that was really powerful. It was not something that like a lot of comparable companies were sort of doing in the market. And I think all of that was really interesting. And I think a few investors thought, if you marry these things over time, there will be some degree of success. And we had some logos, right? We were working with Chipper Cash, and we were working with Luno, and there were a few logos that were very exciting at the time. Candidly, we were doing very little volume, right? Like, you know, at the time, these companies in South Africa weren't necessarily doing huge volume. I think they were doing very well elsewhere. And so I think it was more like very early stage, and there was the opportunity to grow. What happened in the round afterwards, I would say like a year after we had raised the Series A, is actually when we started to get traction. And this was our first pivot into payments versus data, right? We were like, we're full tilt payments, and we built an account-to-account payment solution, which essentially was the equivalent of like a tokenized card transaction, but it was a recurring account-to-account payment, which is interesting for various reasons. You can do a lot of clever things with settlements and recons. You can verify the account holder, whereas you can't do that on a card, for example. You can do more interesting things from a commercial perspective. And so that started to take off really, really quickly. But it was after the Series A. Like our Series A was really, really early in terms of traction. And then from there, we started to sort of like increment traction, all on payments products. But everything you mentioned now was a little bit pre-traction, to be honest.
No, it's interesting you mentioned that. That's an interesting detail. And, you know, before we get into your pivot to payments and arguably pivot into, you know, enterprise, you know, could you just walk us through like the payments ecosystem in South Africa, specifically from like who are the key players and what are the key jobs to be done in terms of like online merchants and online payments, because that sets us up to kind of discuss the specific wedge that you got in the market.
So, I mean, it remains an interesting thing for me, but like if you had told me 4 years ago or 5 years ago when we started Stitch and we were doing more data things, if you told me that Stitch in 5 years would be an enterprise PSP and we'd be doing things like card payments, I'd say like, are you mad? The space is super full. There's no room for another. Why would anyone even try to do something like that?
And that's the natural intuition. The natural intuition is that, you know, South Africa's payment seems solved, you know? No, totally, right? So it's like I want to be perfectly on the nose that it's not something that like we have this grand insight into and we sort of look deep at. We like the payment space has quite a few payments players there, or maybe like 3 or 4 like decently sized South African incumbents. They've been around for, call it 10 to 20 years in some cases. There are, I would say, like Pan-African type players who have entered the market, and they'd even entered the market before Stitch was even a company, like a PayShap or a Flutterwave and stuff like that. And then not too much else, right? There are some like very international players that do very nascent things in the market, but largely it was dominated by a few South African incumbents. And for the most part, everybody was sort of served, right? Like if you talk to any, you know, enterprise in South Africa, any small business in South Africa, they did e-com, right? They accepted card, they accepted pay by bank in some way, shape, or form. Like I can speak about it later, maybe is more relevant. The gap we found there, but I would say largely we were not in like the 0 to 1 phase, right? When we started doing payments, it was at like at least at 1, right? If not at like 10 or whatever you want to call it. Everybody had a PSP. Everybody was processing payments online. You were served in some way. Obviously, we eventually found a gap, and we thought there were things that were underserved, but people had a PSP. Yeah, and that leads us into the gap, like specifically, because the idea of tokenizing an account-to-account transaction is very interesting, right? And it's got all sorts of, use cases and implications. And so, was that the gap, or was there a specific thing around customer service, reconciliation, fraud, or some of those typical elements that you find in payments?
Yeah, that was totally not the gap. Everything you mentioned now was basically the gap. So your insight's like actually a lot sharper than at least mine was back then.
Yeah.
We started to do the account-to-account payments again in many ways because we had the technology, right? A lot of our story is not that we are insightful or clever. It was that we built things that like some people like asked us for, and we were like, shit, we don't know what we're doing. Okay, we'll build the thing that you asked us for. So we had built this, open banking Plaid-esque type product, which you're mentioning. People thought it was fine. It was interesting tech, but no one wanted to pay for it. And then you had people like Chipper Cash and Luno, for example, who reached out and, they were sort of like, this is conceptually interesting what you've done. Why are you like linking a bank account to access data? Like, why don't you execute payments? Right? Like, why do you not use it to do like bank-to-bank transfers? And we're like, okay, that sounds cool. You're willing to talk to us. You're willing to pay us. No problem. We will do that. And so we started doing that. And at the time, like the segues into this enterprise story, but at the time we were just like, anyone that would like vaguely look at us, talk to us, like, we're
going to serve you
in our direction. We're like, cool, this is great. Let's start working with you. And I think what surprised us a little bit is that we actually had a little bit of appetite from enterprises, right? We wanted to work with startups and enterprises and everybody in between. And, you talk to the startups, they would really like that it's a new payment method and they could advertise that, and they would like that the UI UX was really cool and it was slick and sleek. When you talk to enterprises, they would be like, you can like net settle us versus gross settle us. Like, what the hell are you talking about? And it's like, you guys can send us an invoice at the end of the month, right? And we can just pay that invoice. And we'd be like, yeah, whatever. The fact that you want to pay an invoice is absurd. Sure. Like, okay, cool. No problem. People will be like, wow, you can receive transactions in this bank account and send it to that bank account, and you can send it to that bank account based on a rule. And we'd be like, I guess, if that's what you want. And people will be like, whoa, you can send us like a markup file in this format CSV, and you can send it to us an email, or you can send it to us on Slack and Microsoft Teams. And we'd be like, whatever. And I think it was like a really interesting sort of like journey and learning for us. That coupled with like at the same time, people started asking like, can you do our card transactions? Right? These enterprises were asking us. We were like, what are you talking about? Right? Like we're like barely doing this one thing well. Like I can't believe you want to talk to us about other things. And it was like 100 different lessons in there somewhere. But like one is that enterprises like deeply care about all these weird esoteric payments things. Enterprises have 50-person finance, reconciliation, treasury teams working on recon and settlement, and that's all they do, right? And like, how do you make their life easier? And then you have enterprises that have just massive fraud teams that just get no data from other PSPs, so they don't know how to block and interact with fraud. And enterprises have multi-year banking contracts with certain people that require they move certain volume through them, or XYZ, and they just can't work. And it's like all these things on the fringe that matter a lot. And again, not necessarily because of great intelligence, but I think just because we were newer, we could work in this way, right? Like we had no legacy code, we had nothing built up, and we were like, cool, if you want to be like gross settled, great, we can do that. You want us to settle into this bank account? No problem, we can do that. That mattered a lot. And then the second piece was enterprises are like big, bad, like, behemoths that have lots and lots of payment problems. They don't have like pay by bank problems, right? They just have payments problems, like getting my card transactions are hard, doing my recon is hard, full stop. If you can just have one provider that can do everything for you, and they do it at like the service level and quality level that you like, that's really compelling. That's another piece which I would have default assumed was solved in the market. Service levels, right? Many enterprises would get really surprised that they could like WhatsApp us at 10 o'clock on a Friday, and you know, a minute later we responded. And people would be like, "What? You didn't ask us to leave a Zendesk ticket and get back to us on Monday?"
Exactly.
And we're like, "Yeah, you pay us $1 million a year. Of course we're going to respond to you within a minute." And it was just this weird thing where I think like enterprises were treated very similarly to the way that like SMEs were treated, right? And they had the same tooling, the same service levels, etc. But they were very large enterprises, right? They would be large for like any business globally. And that became a really big thing for us too. The fact that Stitch would just like 24/7, if there was a problem, like we'll respond to you within a minute. We'll get 5 engineers on a call in minute 2, and we'll solve your problem by minute 10, right? Like, and that was like a really big thing for us.
And, you know, it just goes to the point, like a lot of fintech revolves around customer service, right? Like the tech, the tech is a new way of doing things, but fundamentally these things like customer service, getting back to you on time, it really matters. And what I'm taking from that is that the industry had settled into a default, right? And everyone had accepted the default, right? Like this is how payments are done. You have to have all these internal workarounds for all this type of things. You know, if you want to recruit someone into your FP&A team, then they need to know how to solve this esoteric problem. And, you know, the industry was what it is. And then you just kind of using technology and just the fact that you care solved most of these problems, right?
Totally.
What was like your first major enterprise, like, you know, you're like, whoa, we're about to sign this contract, and how are the first few months of servicing them, how did that look like, especially for you as a CEO?
We had a few that fell kind of at similar times, but especially like we had like 6 months where we went from like 0 to like actually pretty significant traction for a few reasons. So we had a couple of enterprises fall at the same time. The one that really made us level up was probably Binance, right? It was interesting on a few levels. One was they were entering the market for the first time. And I think, you know, you can conceive of them what you will, and some people don't like them from a logo perspective or this or that, but I'm always very grateful for a lot of the experience there. They entered the market for the first time, so one, there was a learning curve. Two, they are a crypto business, right? Which super high demand, super fast, 24/7, highly fraudulent, right? So like these like quote unquote high risk industries, I think if you end up being able to serve them, you're in pretty good nick for everything else, right? You go and you sign up a big e-commerce player afterwards, and you're like, it's a walk in the park, right? It's like hardly 24/7. The fraud is like really minimal. You don't have to worry about the timing and stuff. And I think what was so interesting about it was because they were entering the market for the first time too, they just had nothing, right? So it was nice for us because it exposed all the gaps we had. So we would start and we were transacting, and it was a lot more volume than we were transacting with initially. But then they'd be like, "Oh, cool, guys, how do you send us the recon files?" And we're like, "Well, what's a recon file? Oh, what do you mean?" Okay, cool. And then you have to work that out. You got to build it quickly. And then we start transacting a bunch, and then there's a bunch of real-time fraud that's happening. And they're like, "Cool, guys, like, how do we turn on your fraud APIs?" Like, what fraud APIs? What do you mean? And then you're like, okay, cool, you need to work that out. And then they're like, okay, cool, guys, like now our users want to withdraw money. How do we do that? And we're like, what? We just do pay-ins. What do you mean you need to do payouts? So you got to learn that. And it was like constantly, like every day you're just getting like smashed in the face and trying to work it out. But at the end of it, and it wasn't, don't get me wrong, we didn't handle all of those situations well. We dropped the ball a lot. But at the
as is
end
expected,
of it, like we just iterated so quickly that we were like quite a serious machine like 6 months later, which I think you only get sometimes if you get one of those really big clients that pushes you. Fortunately, we didn't lose them and we retained them through the process and stuff like that, but it's really hard.
Interestingly, like your story around Binance, it's a story that's faced by so many players in the payment space. I remember reading about PayPal and all their kind of Russian hackers that made them become so good at fraud, and Microsoft working at IBM early on, and that just made them really style up from an enterprise perspective. And so you're coming from a group of hackers into like serious enterprise guys, and one of the things, it's not as easy as a transition as you're making it seem. Like it's much harder, but once you've set it up, and I know like you're coming from a perspective where now you're really now starting to get your real traction, especially from like a personnel and culture team. How do you now start building the chops to serve enterprises in a serious manner? Because serving fintechs fully digital, here's the API, serving enterprise sales teams, customer support teams, all that kind of stuff. Explain how some of the things you got right, some of the things you're still figuring out that are enabling you to do the transition.
Yeah, it's a great question. I would say they're very, very, very different beasts and machines that you need to build. To your point, which is exactly why we did make a hard switch to serve enterprise only, and we made the really difficult decision to offboard all of our non-enterprise customers.
Yeah.
But it was totally the right move at the time, because again, to your point, these are different audiences to serve, right? If you're serving startups and SMEs, you build self-service. You build self-service tooling and documentation and dashboards and customer support.
Yep.
And enterprise, it's the exact opposite.
Yep.
It's what I was saying earlier. It's you hold their hands and you get really high touch and you make WhatsApp channels and you go to their offices and like the mindset and the mentality of what you're building is really different. I would say the makeup of the teams like surprises me at how much we were able to keep the same. So to date, we are still like an exceptionally engineering heavy org. We are, 65% engineers. The next largest 10% is like product. And so I think when you think like, enterprise sales, at least in my head and some of my assumption was, we're going to have to, build a sales force, right? And you sales force
people in
goes
suits.
and like knocks door to door and you do this thing. Up until December, we had 2 salespeople, 1 customer success person, right? And that's been the case forever, right? Now we have slightly more than that, but we have 4 salespeople, 2 customer success people, right? It's not like we hired, 20.
Yeah.
And I think that shows like there is a tremendous amount of leverage you can get in having really, really strong technical products. If you have a best-in-class technical product, you can get really, really far.
Yeah.
The sort of nice thing about enterprise is you are not focusing on 1,000 customers. Like every quarter, we are trying to sign, 5 to 10 customers, right? There's like 2 handfuls. Everyone in the company should know exactly who they are. So you're not overly stretched from that perspective. There are much, much longer sales cycles. It's a lot slower. There's a lot more relationship building. There's a bunch of stuff you need to do there. I think you need to learn to sell into those organizations in a very different way. And that for me is not scaling up how many customer success or salespeople you have. We have to like do all these things that I didn't fully appreciate, but we have like a client solutions team, right? Those are a bunch of engineers that will go sit with our clients' engineers and they will solution with them and they will work out how does our API fit into your world? How do you do recon? How do you do settlements? How would you like fraud to look? Would you like us to block fraud? Would you like us to signal to you and you do that? So engineers that go and sell to other, engineers within, an enterprise's org, we have to be really thoughtful about support. We have 24/7, 365 support. and they're engineers, right? They're not call center agents. Those are also engineers, right? So when there's an issue at 1 a.m., a support person doesn't have to pick up the phone and call an engineer and do an incident. They can solve it themselves. So solutioning is a really big one. I think full-time support is a really big one. There's a bunch that goes into this, but having the muscle to be able to be really strong at formal processes, RFPs, RFIs, things like that. And that kind of becomes everyone, right? You need a really strong security team that is like information security team that is able to fill out those parts of the business, and you show you have the certification. You need a compliance team that's able to do that. You need a finance team that's able to do that. Obviously, you need a salesperson or customer success person to drive that. But those are surprisingly like administrative, right? Like, you think it's sales and, you need to be like, you need to keep pitch to enterprises. But no, sometimes it's like, you just got to fill out 40 pages of documents, right? Which is like boring, and you need to use ISO codes and PCI and this and that. But it makes a huge difference, because otherwise you're just like not going to win an RFP, and you're not going to get through procurement at an enterprise.
And all of a sudden you have to get into things like Gartner and all this kind of like, industry publications that kind of give you credibility. And that in itself is actually not as easy a process as many people think. So there's a lot of learnings there. And, from a sales perspective, is there a pattern around like who the key decision maker, who the key buyer is from some of these organizations? Or do you find that it changes from industry to industry?
No, it's different every time, and it sucks. Because it's actually not super obvious to work that out. Like it actually takes you some time. Because sometimes sometimes it'll be the CFO, right? And the CFO makes payments decisions. Sometimes it'll be a really senior product person. It'll be a VP of product, or, they have a payments team, and, the product leader there runs it. Sometimes it's straight up, the CEO or something like that. It is upsettingly obscure, because often you can be selling to one part of the organization and you realize, they can just give, a recommendation or advice on this thing, but actually the buyer is somebody completely different. And each org is very different. And it's not always super transparent to get that information, right? Because in many cases, people purport that they are the buyer, right? And a lot of people make themselves look a lot more senior than they are. And then you're like, cool, this has been 6 months. What's the story? Let's get it signed. And they're like, okay, I'm totally going to go take this to the department head that's like separate to me, that like I don't report into, and it's like a whole different thing. So I think that like we spend like an upsetting amount of time like doing org charts and like mapping out an org, and we're like, these are the 5 people, and these people report into this person. These 2 are peers, but actually this guy makes the decision even though they're peers. That in and of itself is also like a muscle you need to build. And
it's you really like opened up a very interesting thread, because especially as a VC funded company, I mean, one of the risks is some of these extremely long sales cycles can be detrimental to your ARR growth and all that kind of stuff. So how do you manage that risk? Do you manage it by ensuring that your unit economics are really good, or just increasing the size of the top funnel so that at least every quarter you're closing this number of deals? How do you manage that risk of slowed down revenue growth because of a long sales cycle?
I don't think we're the best at making it super smooth, and increasingly it's something that we always want to be better at. What I will say is it is not so long that it doesn't fall within a year. Right? Okay. Like and we have deals that last longer than 12 months for sure. But like, even if we have 4 months where we're like, wow, we just like haven't got a new customer to go live, what on earth is the story? But if you look at like Jan 1st, 2025, and you look 31st of December, you would have enough of those deals fall in that time that like your year on year is good. Sometimes your month on month can just be flat, right? And for a long time that was uncomfortable. and you sort of don't know how to feel. You go into the next board meeting and you're like, the last 3 months have been flat. And you feel like, it's a venture-backed company. It needs to grow. But we've never had a year where we've missed our targets, right? Like year-on-year growth is really good. So now we do try to keep the funnel really big. And what I will say now, call it like 3 years into enterprise selling, it is actually getting a little bit smoother, but because we're 3 years in, right? I actually don't know how you're, like, I'm sure smarter people have worked this out, but like if you're starting enterprise sales, it's just lumpy. It just is, right? You're going to go like 6 months and then you're going to get one customer. Then like 9 months later, you're going to get your second customer. What's great about them is they're step change customers, right? 100%. You get one customer and there's like, boom, you're in like a whole new sphere every time. And now it's super interesting. Conversations we had like 3 years ago are like coming around, right? And it's like now we have a brand in the market and we have significant volume, which means we get significantly better commercials from the banks. And there's a bunch of flywheels that sort of, you see compound over time. But we have like had plenty patches where it's like, slow, all at once, right? And then you get like 2-3 customers go live. So I would say at least if you can sort of, you have a board that understands enterprise sales cycles, can be lumpy, they can be slow. You're not getting like overly, even for us, like we're a lot better now at, what is the expression? Seeing the forest through the trees. Like it would be a disaster if we missed our targets on a yearly basis. And yes, we have monthly targets. Yes, we have quarterly targets, but we try to be pragmatic about what these things look like. If you see the deals aren't moving, that's really scary. But as long as the deals are moving and you have some certainty that they're going to close, like I actually think a year time horizon gives you plenty of chance to make your numbers.
And I think it's Warren Buffett who says that a lumpy 25% is better than a smooth 10%. So, it fits into your model.
Totally.
It fits into your model.
100%.
And now, like, for you, which sectors are you seeing like the best growth? Because, for instance, most of Africa, gaming, gambling, that's massive. That's where a lot of like the payments companies are making a lot of traction. And then if you look at from an enterprise perspective, for instance, you recently closed a deal with Vodacom for Vodapay. Congrats on that. But it's like a fintech enterprise. But there's traditional enterprises like Foschini and, Pick and Pay and all those kind of people. Like, why are you seeing the most traction from like a growth perspective? Like, I like this sector because not only is it growing, but it's good. It's easy to sign on.
There's no sector that is easy to sign on.
Easier.
I've yet to find that one. But I can speak to some of the trends we're seeing. Like from a online gaming perspective, that's a large industry in South Africa, and that continues to grow well. We actually see tons of growth in e-com and retail still, right? Like e-com is growing really quickly. There's a handful of e-com businesses that continue to grow at like a surprising rate, despite being like pretty well penetrated already. And then there's combinations of, call it like e-com and retail, like you mentioned, right? Like there's like a Foschini Group, right? And Bash's their e-com play, for example, which is growing phenomenally fast in what is a much older, like historical business, right? And I think it's easy to think that like only like digital new agey startups and stuff can come in and disrupt the space, but like that's a great example of, call it like a startup, quote unquote, within an enterprise, which I hate when people title those, but it is a really great example of that working super well. That's been good. I think from a retail perspective, omnichannel has started to become a thing too, which is also driving a lot of growth. Like South Africa still is 90+% in person. So if you can start to marry the e-com online and the in-person offline, it becomes really interesting. I don't know if I necessarily the growth is gigantic from like a telco or more incumbent space, but it's really significant volume still. And MTN or Vodacom, etc. They just do a ton of incumbent volume, and we're starting to like work with them on some of that stuff, like existing stuff, not just on some of the newer stuff. like South Africa is like very deep from a number of sectors, which I think is quite exciting. We started in a few buckets, and now we're looking at everything, where it's different to not only like other African markets, but a lot of markets are like just very lumpy in one vertical, whereas it's like, to your point earlier, South Africa is just like quite deep in a lot of financial areas.
And I assume that whole omni-channel is what drove you to now, I think, acquire Exit Pay and go into in-person payments. And I think for me, the big question there is that when you find that you've got a really strong relationship on the online payment side, does it automatically translate into them onboarding you on the in-person payments there, or there's some quirks there that you've come to realize that, you know, it's actually not as straightforward?
No, nothing straightforward, nothing automatic. But the core thread you're pulling there is correct. I think so many of our product decisions, and now this is like an acquisition, but it's a product decision, is just customer led, right? Sure, you can look at the market and you can say 90% of the volume is in person. Like, you should do something in person. Like, fine, that's obvious enough. But what, right? And I think it's like, where's your right to play? Where's your right to win? Ours wasn't, you know, in person, right? What do we know about in person? We haven't built it. We aren't smarter than the next person there, for example. But where it is in these customer relationships and servicing enterprises, right? Like being able to at scale do recon, fraud, customer support for these enterprises is really big. And, you know, winning them once isn't enough, but it is very important if you're working with them across numerous things and they enjoy working with you. It again feeds back to my point on people want to see one dashboard. They want all their recon in one place. They ideally would have one provider if they can serve them well. So we had businesses that we were working with online asking us, can you guys do in person? Can you help us with our recon in person, even if you can't do it? And there were all these things that people were asking. And so it's definitely not automatic. We're starting to do this, you know, in some cases now. I mentioned we worked with Bash online with TFG, and now we're in a bunch of their stores in person, and we're marrying them from an omni-channel perspective. And that came, again, same story. So we had a relationship, we were working with them, we solutioned with them, and that was really part of like the thinking around acquiring Exit Pay. What we really liked and sort of thought there is we wanted to approach in person the same way we approached online. What are the ways that we can work with you and we can solve your problems, but meet you as close to where you are as possible, right? Like, where online was really, like, we accidentally found fit was all the silly stuff I was mentioning, right? Like, we can settle you into this account and this timing and this and that. Like, we're not going to make you do a lot of work. We're just going to work this out. Where it gets like tricky, and I think it would be like really difficult, is if we're like, hey, here's this purple Stitch device, right? Enterprise, we want you to go to 30,000 of your stores in 9 provinces in South Africa and rip out all your old devices and put in all these Stitch devices. And like, we hope that works. And, you know, that doesn't cost you multiple, you know, billions of rand. That's really tricky, right? And it's like a big lift and it's a huge thing. And why would they even, you know, they trust Stitch online? Why would they trust us in person? The Exit Pay solution was really compelling because essentially it allowed you to like bring your own device, right? You could basically tell us what device you had. And we would not be precious about that. We could install our payment application on that device, right? And we could provide you this new functionality. We could provide you one place to recon online and in person. We could provide you, you know, alternative payment methods at the point of sale device. We could give you all the functionality and the tooling that you're looking for, but without trying to get you to do like a lot of the lift. And that's really where it came from.
And I think, you know, it's an amazing point, because I think with enterprise sales, people underestimate the power of inertia. Like, even if something is an important job to be done, there's so much organizational inertia to get it done. And so, you know, it's always important to make it as simple as possible for the client. And that's a very interesting thing. And, you know, very good commercial insights from you and your team. Now, I'd want to switch into like the bigger industry, right? You know, from an African perspective, also from a South African perspective, as we mentioned earlier, there are a number of players in the payment space. New players are coming in. Of course, banks always have their propositions, but there's always pros and cons about those propositions. But there's this kind of narrative that's going around now that overall the industry is getting saturated, and there's a lot of VC, I'd call it PE activity towards consolidation, so that you can find this one winner. Yeah. What's your view on this type of industry saturation and consolidation, and how that will play out over time?
Yeah, great question. I'm less opinionated about, call it, on like an African-wide lens. Yeah. I increasingly am of the belief that you need to look at each market individually, and there's a lot of depth and a lot of nuance to each. So I'm not convinced there'll be like Pan-African consolidation, for example. Yeah. There's a bunch of, call it, local consolidation happening in South Africa already, right? We've seen, other PSPs be up for sale. Yeah. We've seen consolidation already. We have been acquisitive, right? And so I think that's starting to happen. And I think it'll continue to happen. It probably is necessary it happens, but I don't necessarily think it has to happen through like, acquisition and stuff like that. I think certain venture outcomes just require you to get to such significant size that if you are competing in a single market, it does get tricky if you're sharing the pie with 5-6 people, right? A lot of the businesses that we have competed with are older, like I mentioned, and some of them are venture backed, some of them aren't, some of them are like good businesses that have compounded over 20 years type of thing, but very bootstrapped, and don't necessarily need to be the scale where they are now. But in a lot of cases, they have investors, right? And the investors want to see some liquidity somehow, even if it's venture outcomes or not. Our belief on like consolidation is like less, call it, like how are we thinking about what happens to all the competitors? It's more like what happens to all of the enterprises. South Africa is like 95% of like volume gets driven by like 5% of businesses, right? It's like very, very, very enterprise driven. Whereas a lot of other African markets, I think it's very different. Like in Nigeria and other markets like that, there's a huge SME play to be had, right? And I think like players like PayShap and Flutterwave have built very, very different and interesting businesses kind of doing that. Here, for example, we just want to like, how do we work with, how do we do 100% of volume on like the top 100 enterprises in South Africa? And in doing so, right, like we believe we have the ability to execute on that. I think it's really hard, but hopefully we think we can execute on that. And we think we have right to play and right to win in that space. And that ultimately consolidates the volume. It doesn't consolidate like the players, right? Like I don't know if there's consolidation with our competitors and stuff along the way, but like the volume will consolidate to one player in that case. Yeah,
that's a very interesting point. I mean, a very interesting take. So I really like the idea of consolidating the volume. And that's just a function of like having really good customer service, having really good tech, compounding over time, building your reputation, and just doing more and more volumes of the big players, and you mentioned right to win. Are my assumptions right about those are the things you need to do from a right to win perspective?
I think like to be reductive about it, it's a few of those, right? It's like, what are your service levels? How are you servicing customers? What does your product look like? And product encompasses many things, right? It's like, do you have enough functionality? What is your conversion like? What is your support on that like? And I think over time that becomes interesting. Commercials, of course, play a role, and that comes in there. But then that also plays into what I'm saying. And the more scale you have, the better you can price, and that plays a role in there. I think bang on.
And like there's a growth of this idea of payment orchestration, and these are companies that say, listen, we are an API layer that sits on top of all your PSPs, all your banking, whatever's, and just now abstracts that, improves conversion rates by automatically routing and all that kind of stuff. Do you think of that more as an SME play, or do you think such businesses will have a major role to play in enterprise in the future?
For me, it is. For me, it's definitely an enterprise play. Right?
Yeah.
Where, like in my view, and everybody kind of defines orchestration slightly differently, or who should use it and what it is slightly differently.
Yeah.
In my view, it is a lot of what enterprises typically do already, right? Like I'm saying, we're working with all of these enterprises, but in many cases, they do have a redundancy PSP because they just need to, right? They're large enough that they want to have failover and they want to have control, and they route in some cases. And the way we typically win accounts is that we start working with somebody and we are the redundancy, right? And they have to A/B test us. So enterprises do this, and they need to manage their payments. Like payments is ultimately the way they're making their revenue. It's the way they're getting paid, right? They need to have full certainty over it. Orchestration allows them to do all of this through a tool or through an API, right? Like in my view, I don't think it makes much sense for an SME. If you're an SME, you should pick one of your PSPs that you think serve your use case well, whether it's because of payment methods or cost or whatever the case is. But if you're an enterprise and you're really looking to optimize on the edge, you're looking to optimize conversion, fraud, you're looking to like very rapidly add new payment methods, I think orchestration is super interesting. I think it really depends on what you're trying to achieve. I don't know if it always makes sense in an individual market, right? I think if you're orchestrating multiple geographies, very interesting because you're looking to get into multiple geographies at a very rapid rate. You don't necessarily want to go and set up, all these PSP accounts all over the show and manage all of this. You want to integrate once and be able to like unlock a bunch of things, which I think is like, sort of a next iteration to the way people have worked with, call it like emerging market PSPs, e-banks and dLocal and stuff like that. I think if you have a really, this is like very, very self-serving and self-fulfilling, but if you have a very, very deep and wide payments partner in one market, like we do have an orchestration product and it is something we offer and we do work with enterprise on it. I don't always know if it makes sense in South Africa, right? Like often someone comes to us and they're like, we want to orchestrate through Stitch. And then after 2-3 conversations, they're like, oh no, we'll just do a direct integration into you as a PSP because you solve what we're trying to solve for. What are we trying to solve for? We're trying to solve for uptime. Stitch solves for that because Stitch has multiple acquirers and multiple switches. And like you do that, it's not cookie cutter for me, but I think it's a very sexy term right now. And a lot of people are trying to like fit it into their payment stack.
No, I think you've hit the nail on its head firmly. I think, that makes tons of sense. And it's a very interesting insight into the industry because I think that's an emerging kind of like vector that, bit of VC dollars are starting to pour into. And so I really appreciate those insights. Now, moving into like South Africa, I think, I spoke about PayShap earlier. I think there's debit check now that's been, that's also been, launched some time back and it's working well. What are some of the interesting trends you're seeing in terms of like how South Africans are paying? It's traditionally a very cash-heavy market, and outside of cash, it's debit cards, and it's been notoriously cash-heavy, right? Are you kind of seeing any interesting trends in terms of like adoption of payment methods, specifically from your data?
A lot is changing really quickly. I would say the first change, which has happened over the last like 2-ish years, has been like mass adoption of, call it like pay by bank, right? And largely the driver of that to start, and is still the case, is Capitec, right? Like Capitec is the largest bank in South Africa. I think the stat now is that they have like 60% of Bank South Africans. It's gigantic. Maybe 2.5 years ago now, they launched Capitec Pay, which was a direct, it's like I call it open banking type of API. It's a direct payments API. That saw such massive adoption. Within a year, they were doing 15 million transactions a month.
Wow.
I don't know what the stat is now. It's probably orders of magnitude on that. But they're doing 15 million transactions a month, which, to put that in perspective, the UK, after like 6 years, was doing under 9 million a month in all of the UK across every single bank. Right? It's like one year, right? And it was like really interesting because you didn't necessarily see it eat into too many other things, right? It didn't necessarily like cannibalize card volume. Cash is a bit harder to measure, but it just like opened up the market to a huge segment. And so one that's been really interesting. The kind of newer ones that we're seeing are,
and before you go into the newer ones,
online adoption.
Before you go into the newer ones, like, why did that work? Why? I mean, like, what did they get right? Of course, they have a massive client base, and the specific reason I'm interested in that, debit cards work pretty well. Like, they work. So what happened with Capitec Pay that just made it take off? Like, what market factors just enabled it to take off?
Yeah, multiple things, I would say. I don't know if I would say debit cards work as a blanket statement. In many markets, yes. Capitec debit cards often were not like quote unquote internet enabled, which meant by default you actually couldn't transact online. So you had to go into the branch or you had to change it on your banking app in order to do that. Used to be a thing. So there was kind of like lower conversion there. A degree of mistrust, right? Like not everybody trusted card transactions or entering your card transactions online. And I would say this is an interesting thing too, right? Because we did work on this like pay by bank space when it was like, reverse engineering or screenscaping, right? Which required what? It required somebody to enter their username and their password, right? And we would see like much lower like people would just forget what their username or password is. We'd see people just drop off. People would be too scared to enter their details. And in many cases, like people just, the Capitec user base, for example, is typically like a slightly lower income user base. And, the famous example is that you mentioned this like 83% financial inclusion stat or whatever the number is. But the famous example of how stats can be misrepresentative is very, payday comes and you see these huge lines at Capitec ATMs because yes, they have received their salary in a bank account, but they withdraw the whole thing in cash. Right. And so there was very low utilization in call it like a pre-Capitec Pay world. Post Capitec Pay, I think they just did so many things right. One, it was enabled by default for everyone. Two, it kind of like rolled out very aggressively across major merchants that people would use. So like Vodacom, MTN, MultiChoice, for example. And we were fortunate to play a role in some of those. And it was just dead simple, right? How does a Capitec Pay transaction work? You put your cell phone number in, you get a approved deny notification in your app. That's it. Right. They just nailed the user experience in like a very captive audience that has slightly lower technical literacy, that has slightly lower like financial trust. And it just is super taken off. And that's essentially what PayShap is going to look like. What PayShap has proposed as the model for request to pay, like you mentioned, PayShap has started to take off. Largely, PayShap has actually only started to take off as a disbursements use case, right? Like consumers receiving money from businesses, like people doing payouts and P2P, right? It's still quite limited. The limits are 50,000 rand, like $2,500 per transaction, and largely for payouts. The killer use case or like the UPI or the PIX use case that really made those things explode hasn't actually come yet, right? And it's now quoted as, not quoted, it's titled PayShap Request. And essentially it's a business will be able to request money from a user and the user just clicks approve. I think that will start to see massive adoption, which should happen at some point this year. But it's essentially the Capitec Pay flow. It is the exact same sort of use case. You enter a phone number and you get an approval.
And I think all these things work in your favor because you've built the chops to actually execute it for most of the enterprises. So it's a very interesting tailwind for you guys. And then, additionally, on top of like payment trends, I think mobile money specifically, there was kind of a failed launch over 10 years ago. But now I think I read that there's over 8 million mobile money users. Of course, the active users are way less. Are you seeing mobile money volumes pick up there? Or between PayShap and Capitec Pay, there's really not much of a use case for it?
I think it could become interesting. It's still nascent, like you mentioned, but we're starting to see volumes pick up a little bit. I think the way that telcos have gone about it this time has been interesting to get user adoption. They've like embedded Vodapay and Momo, for example, inside or your default sort of into the path inside your MTN app or your Vodacom app, right? And so even if you don't necessarily think, I'm going to get a mobile money wallet, I'm going to use it to P2P or pay merchants and stuff like that, it's really a nice way to pay for your airtime, which is obviously like a really, really common use case. So people have that and do that, and then you start to get funds in your wallet and you build it up and stuff there. And so you're like, hey, there's 8 million users. I don't think that's like, I think people sometimes scoff at the user numbers or install numbers and stuff like that because those aren't transacting numbers. But I think it's interesting because they are transacting on the app, right? Maybe they're not using it for the Momo use case that you want, which is paying merchants or P2P. But I think that's quite compelling. I don't necessarily think P2P in South Africa is super solved yet. I think if they have a large enough transacting user base, no-brainer for merchants, right? Like merchants just want access to a large enough user base. So, like, do I see it ever getting to M-Pesa sort of dominant ubiquity levels? No. Right? Like, I just can't see it in sort of our ecosystem as it exists now. Could it be a genuine payment method and have significant adoption in a couple of years? I think very possible.
Very interesting insights. And, just switching back to Stitch, congratulations so far on the progress. I know, you don't want to pat yourself on the back, you're still building. But, what do you know now that you wish you knew back then in 2021? And I know you are hacking and everything, but, now, 4 years later, 5 years later, what do you know now that you wish you knew back then?
Oh, so many things, so many things.
Do you have enough time even?
We don't have enough time. But yeah, I mean, I think a lot of obvious stuff, but I think you increasingly realize how important things are. All of these like market learnings I'd obviously like to have known way back when. And I think we could have moved a lot faster if we were more deliberate in some cases, like if we were enterprise first from day one. And I think like we've had tons of learnings about distribution and how to sell to enterprises, working through channel partners and not doing that, which I think is really tough. It's very hard for me at the same time too, because like all the mistakes that we have sort of made, some of them feel like you have to make them, right? Like, could we have worked with enterprises day one? I don't think so. Right? I think we probably needed to like increment a mom and pop store and then a slightly bigger mom and pop store and then a startup and then a bigger startup. And then, so like, I'd like to say, all of those lessons we can just take in now. And then like all the stupid, like classic startup advice that you get around like hiring and firing and like being really decisive about team and being like really slow to hire, really fast to fire, etc. It's all true, right? I at least have made every one of those mistakes in the book. Like everybody gives you the same advice, and it all like is really, really true. But I think ultimately, like success or failure, like is just the team for me. I think it just depends on like being able to hire a really phenomenal team and being able to retain them. And like everybody knows that. But it's true, and it's truer, and it's more true, and every day it becomes more true, and that just is like a fact of life. I think we've learned a lot of stuff along the way, but would need another 2-3 podcasts to tell you all the things we've done wrong.
Yeah, and like on a personal level, have you noticed any interesting evolution, at least within yourself, like something that has slowly changed about your perspective on things over time, or like something you're slowly getting better at as a CEO?
I am at the best of times pretty anxious and antsy about everything.
Yeah.
I follow up too incessantly with everybody about everything, and I probably stick my nose in too many things where it doesn't belong.
Yeah.
That said, I'm getting a bit more comfortable with being a little more patient. And I would say I'm not doing any of those things well.
Yeah.
But again, to this point of like enterprise sales and slow time horizons and stuff like that, like any deal, I used to follow up every single day. What's happening? And shall we message the person? Should we do this and that? And like, why haven't we built the product? And like, it's a startup, and obviously you want to move fast and stuff like that. And it's a bit counterintuitive to say things take time.
Yeah.
But like things do take time, right? And I think I have a little bit more comfort with that. I do get quite start-stop sometimes when I sort of, I'm like, what's happening with this deal or this or that? But I think it used to be harmful. I think like it's like undue pressure, like control the things you can control type of thing. So I'm a bit better at it. I'm still always anxious, but I'm a little bit more comfortable with, this thing is moving a little slower, or this is being pushed out. Like I can deal a bit better.
Yeah, it's learning how to be patient and impatient at the same time, and it's a very interesting dance. Looking forward, like where do you see Stitch? And I know it's such a cliche question, like where do you see Stitch, down the line, 5 years from now? What does success look like for you guys?
Yeah, it's a great question. I think it's surprisingly similar to the stuff I mentioned now, right? We're very fortunate to be where we are, and we're very proud of the customers we work with. But, I mentioned, how do we do 100% of volume with the top 100 customers in South Africa? We're at maybe like 5% and 15% or something like that, right? So it's still really, really early. We are very, very, very early on in person. So like, where do we want to go, in the next, 5+ years is essentially we want to process every payment in South Africa, right? Like how do we get to the point where we have disproportionate share, at least amongst these enterprises, which as I mentioned, is representative of, more than 95% of volume. We want to continue to get sort of like up the metal, right? We want to start to be able to acquire transactions ourselves instead of having to work through a bank. We want to fully be able to serve people for omni-channels, so in person and online. Do the vertical sort of integration in terms of acquiring, which is very similar to like, how an IDN, for example, works in Europe, and just continue to get up that value chain. So for us, there's also like so much volume, so many businesses we don't work with, so many things that we're still nascent on, that, it would take us like a lot longer than just 5 years to accomplish those things. But that's where we want to go. Yeah.
And you're well on the way, it seems. Yeah. So, great job. And closing round, you've gotten tons of advice as a CEO from many people. There's, of course, the traditional hire right and, hire fast, hire slow, fire fast kind of thing. But what is some of the most interesting advice you've received? And especially if it's from like a unexpected source that sticks with you to this day? I always answer this question the same way. Maybe not such an unexpected source, but it was my old boss. He was the CEO at Smile. And his advice, which I still almost think about every day, is get people to say no. Right? And I have found it a very empowering and powerful thing. I think, like, to my point, like, it's very easy to be anxious, and at the best of times you're a quasi interesting company, you're not that exciting and this and that, but like, especially at the early days, right, I think the instinct is
to default be bearish about everything. And to some degree, that's true or not, because, startup people are a bit more bullish. But like, especially when it comes to hiring, I think the instinct is, no, why would this person ever come work with us? They work at, Stripe or McKinsey or MTN, or they have this high paying job. Why would they do that? Or, they're studying their MBA at Oxford. Why would they care about this? Or they are, starting their own business. Why would they want to talk to us? And it doesn't just apply here, but the advice is have the conversation with someone, right? Put a real offer on the table, and I don't mean money, but something significant that someone can actually latch onto, and get them to say no. Right? Like, your default starting point is no. They don't work, with you. They're not working with you. Don't in your head say they definitely won't say no. Worst case scenario, you have the conversation with them and they're like, crap, sorry, Kiaan. This is not for me. That's your default starting point. You would be so surprised at how many people are unhappy at their McKinsey job or not enjoying the startup that they just started, or this or that. And we've had so many incredible people join Stitch because of that. People that on paper you would say not a chance in hell they would work with us, because we are a stupid 2-person startup in a room that doesn't know what we're doing, which is true, right? But so many people are open to that. And it's the same thing with customers. It's the same thing, a bit more thoughtfully, but with investors, right? I think it's really easy to be like, no, I can't talk to that investor. They'll never invest in this weird South African company. They're a globally incredible investor. They'll say no, or this customer can never work with us. They're so big. They're a public company. They won't do that. I think it's really empowering to be like, you're already at no. Just have the conversation. If somebody says no, that's actually no problem at all. There's only upside.
It's interesting you say that. I think there's a book by a gentleman called Chris Voss about negotiation. He's a former FBA negotiator. And one of the key pieces of advice he actually gives for negotiating tactics is to get to know as quickly as possible. And on top of that, actually push for a no. And somehow, even from a negotiation perspective, when you push for a no, you give that person power. And it kind of works in your favor in terms of them now wanting to work with you. And it's so counterintuitive, but it works wonders.
Yes.
And I fully get it. Now we've come to the end, man. This was an amazing conversation. Went way better than I expected. Tons of insights. It's really good stuff and really insightful. Very authentic answers about your role as entrepreneur. So thank you so much for coming on the show. This was the Frontier FinTech podcast, F Squared podcast. Thank you so much for listening to this episode with Kiaan. And make sure to subscribe to the newsletter. Hit subscribe on the channel below. And thank you for being a supporter of Frontier FinTech.